From our Stars and Dogs segment, it's time for this week's Dog.
Verde AgriTech. So the ticker symbol for this stock is NPK on the TSX, and the stock was down over 50% in the past 3 trading days, where it currently trades at about $2.66 and has a market cap of about $145 million. So Verde AgriTech is an agricultural company which produces and sells fertilizers in Brazil and internationally. The company offers multi-nutrient potassium fertilizer under multiple brand names. As well, it holds 100% interest in the Cerrado Verde project, which is the source of potassium silicate rock that includes about 30 granted exploration permits covering an area of 45,000 hectares located in Brazil. So moving on here, so driving the decline essentially was the 2022 results and guidance. So if we look generally year over year, the financial results looked good, with revenue up 190%, EBITDA up 271%, and EPS up 386%. However, the company missed its 2022 guidance substantially, where you can see over on the right-hand side, their original guidance provided in January of 2022, and then they revised it upward in May of 2022. And you can see revenue came in at 80 million approximately, which was far lower than the revised estimate upward. EPS came in at 34 cents for the year, barely half, not even half of their revised upward on guidance. EBITDA, same thing, and their sales for tons as well, substantially missed. They were looking at about 1 million tons. They only did about 628,000. And now management did provide a comment for the underperformance, and they said, when the war in Ukraine broke out, there were concerns about a potential shortage of potash. In reality, however, the market was oversupplied. Throughout 2022, many farmers refrained from buying potash due to the unprecedented soaring prices, resulting in 15% Brazilian potash imports and consequently a record inventory buildup. In Brazil, the last quarter of 2022 saw the convergence of several unfavorable factors, including pre- and post-electoral tensions that drastically reduced investments by farmers. And moreover, 2 years of bad weather severely affected coffee harvests in Brazil, leading coffee growers to reduce expenditure on inputs. Now, looking forward, the forward guidance also doesn't look that great. So in January of 2022, they provided their sales target in tons of 1.4 million. They revised that upward to 2 million in May of 2022. And more recently, they ended up giving a range of about 800,000 to 1.2 million tons, which isn't that great. And as well, they are using a price of $450 US for potassium chloride here. So keep that in mind. And we can look here on the next slide. This is what the price of potassium chloride has been doing, or potash. And, you can see here that we are down 50% year over year. So my takeaway here, management did a poor job gauging its production guidance, but realistically, I cannot blame them. It is extremely difficult to gauge the forward financials of a business when its operations are extremely reliant on a volatile commodity. And like I said, just look at the price of potassium chloride here, where it's down over 50% year over year. And everyone out there was saying, oh, it's going to be nothing but a gravy train for us because of the Ukraine war. Well, it didn't pan out that way. And the market clearly didn't like the reduction in the 2023 guidance, where even using the midpoint of its forward EBITDA guidance, the stock still trades at about 11 times enterprise value to EBITDA. Now, the company is expanding its operations, but with tough comparables, headwinds in the sector, and reduced guidance, it is not surprising that the stock took a tumble. And let's bring it over to you guys. Let's see if Ryan picked up anything that I pronounced wrong.
I hope so. No, I mean, I think it's just the guidance
That's
range
Ryan's
there.
greatest skill. I will actually say thank you for covering that company, because I actually remember we got several questions about it back when the outlook for potassium and potash was very strong, and the valuations on it looked incredibly attractive. Our main thing was just that, it's very commodity price sensitive. It's difficult to really get a handle on where the earnings are going. And this is just a great example of how that, there is a certain story that was being told at a time that made sense. And that story just turned out not to be true because there's so many moving parts to the macroeconomic machinery, right? And it's difficult to understand, exactly from the supply to the demand to like how the industry or how people adapt to it. The same can be said of natural gas. It was said that like the story was that due to the war, the natural gas prices were going to skyrocket, and they did for a time. But since they peaked in late last year, they've absolutely cratered.
Yeah,
so.
But I think part of the lesson there is buying something based on a one-time event that may not be sustainable is always a recipe for disaster. I mean, it's just, you may get a momentary bump, but you end up usually significantly lower than you were investing in a company based on that a one-time type of event. What really caught my eye in their guidance for this year is the range of earnings per share. They're looking at 4 cents to 29 cents. So the stock right now is either trading at 9.17 times the 29 cents, or it could be at 66.5 times the 4 cents, which they, could earn next year. I mean, to be honest, when you have a range that is that wide, like it's a 600 and something % increase from 4 cents to 29 cents, there is hardly a point of putting out guidance. And it kind of illustrates the variance in a commodity-based company. We talked about that right at the start here, how high it can be and how dependent they are on the underlying commodity. And in this case, it shows you the variance that they believe is within the year. I would say there's also a chance that they fall outside of that guidance, either on the high end or on the low end. They may lose money this year if the fertilizer price, really goes against them. And again, shows the difficulty in putting a valuation and a forecast on this company, because we would value it based on forecasted cash flow going forward. That company itself, who has intimate knowledge of their business, has a massive range of possible outcomes over the course of this year for their business. It is very difficult to then price them ourselves or for any analyst team to go out there and price that business, which means they will perpetually, and should, these type of companies trade at very low valuations. So, that is the issue with these businesses. And some people bought into the story that Aaron was talking about and got bit in the ass over the last year on this company.
Yeah, and I'll add one thing too. So the CEO of the company reached out to me on LinkedIn about like late 2021, and he was telling me like, make sure that you're following our story in 2022. And, I kind of responded with him. We kind of go back and forth. He's telling us, he tells me this is our 2022 EPS guidance of 50 cents. Check it out, blah, blah, blah. Well, in July of last year, I ended up asking him to set up an analyst call because we wanted to do some more due diligence into the company. And after, going back and forth, messaging with me, telling me all about the story, when I tried to set up this analyst call in, July of 2022, he didn't say anything to me. So, he just dropped off. So it was like, when the story was high flying and doing well, he was pushing it out there, but all of a sudden when things maybe turned a little negative,
not the best sign. Not the best sign. No.
Brennan.
Mm-hmm.